important is mentality when it comes to spread betting?
Well, like with anything, the mentality of the person is really what's going to make the difference. If everyone's trading on the similar playing field, everyone is seeing the same market movements, it's really down to the trader's personality that's going to see if they make any profits or gains. Ideally, they'd be poised and precise. They'd, have a toughness to try and persevere when the times are tough. They'd have a lack of ego for when things are going well. Ideally, they'd know when enough is enough. That doesn't just mean when your losses seem to be getting bigger, but when your gains seem to be getting bigger as well. Knowing that moment when to stop and say, okay, this is how far the trade has taken me, I'll move on to something else.
So how often should a trader check their positions?
Well, obviously there are plenty of daily profits to be made. However, for long-term traders, they'll be looking at positions over weeks and months. And checking their day-to-day fluctuations can be incredibly tempting. However, it's resisting this impulse is sort of vital to the long-term success and the long-term sanity of a trader. If you're constantly checking the micro movements of a stock, you're going to come undone and perhaps make decisions that aren't necessarily in your best interest. It's those traders that can avoid, smearing their sticky fingers on a portfolio on too regular a basis that are going to succeed. They need to let the stock, have its way and use stops and limits to control their positions rather than their own impulses.
So what should a trader do if it all goes wrong?
Well, obviously it can be, hard to maintain composure when, the world seems to be falling around your ears, which is something that, happens perhaps more often than a trader would like. Yet, if you, cool heads and calm decisions can sort of lead to, a brief moment of, green, a few gains in amongst volatility. Matching market volatility on the hand with panic is always going to be a wrong move, and it can undo the most seasoned traders in the blink of an eye. It's those traders that can really, withstand the heat of the kitchen in those moments of toughness that are going to persevere and make the gains in the long run. Those that flee the first sign of red are going to come undone, really.
So when do you think a trader should change their method?
Well, abandoning what you know can always be a risky move. Be that your technicals or your fundamentals, that's up to the trader. Moving away from what you feel comfortable with can perhaps lead to some dodgy results. At the same time, blindly sticking with what you know, even if things seem to be going wrong, is going to lead to the same kind of situation where you might be seeing more losses begin to stack up. It can be hard to find a balance between the two things, knowing when to stick with what you know and knowing when to move away from something that might be going wrong. If a trader is struggling with that decision, it perhaps is best for them to examine what exactly is going wrong. Is it the system they've chosen? Is that leading them astray? Or is a lack of rigour in implementing that system causing the issues to occur?